Hey traders, Jeff coming to you here. Welcome back to Full Throttle Traders. I want to take a minute today and kind of share with you when you're selling options, a few things that we did on the McDonald's play here. We brought our room members in and how we actually navigated this play. Now, we took this play when the market was just decimated in the last couple of days off the huge selling that came in, the selling pressure off of a lot of things that's transpired in the markets in here. So, and then there's a few things here why we went long in this particular play. This is what I want to draw your attention to, because you need to scan through these stocks specifically and look for some of the criteria. The odds increase drastically when you move in this favor. Take a look. Okay, so this is the daily chart of McDonald's MCD here. And if you look at this in a vacuum, the way we have been moving up here for quite a bit here, the thing I want to identify is that you really got to just know where supply is, know when support resistance supply is. We have us coming into a square top. Now, normally, and you've heard me say this before, I typically don't trade north of 3 bars. Sometimes the third bar, if it's a wide range bar, bringing volume in, and specifically beyond the fourth bar, I'm not trading. Now, let me show you why I decided to do this. Now, there's a lot of factors going on here, but I was able to assimilate this trade based on some technique that we use using a point system. Basically, I look at the play, and that being a neutral play of 20 points, and I start adding some of the criteria like Fibonacci's, the 8 EMA, hammer, bottoming tail, 50% retracement, things like that. And that gives me the posture to move forward in the play. Take a look at this. So here we are on the daily chart of McDonald's. We entered in selling this option yesterday when the market was decimated on day 2 yesterday in the markets. So obviously this is that would have been 2/24 of 2020. I'll go back and look at the markets that day. Day 2 market just killed once again from Friday to Monday, and Friday to Monday, and even on Tuesday down quite a bit here. So the reason we took the play is we were coming into supply. That's a negative, right? But we had strength in here, and I'm going to draw this back to the 65-minute chart because it's all in how you see the smaller time frames beginning to shape up. Remember what I said yesterday on the previous video. Where money has been and how it's formed will dictate a higher probability of where the future is of that chart going or possibly not going. So again, the pullback was about 50%. If you put a Fibonacci on that, at 50%. Notice where we were trading. We got back above the 8, holding and closing above the 8. That's the dotted line in here. And then, of course, in this trade here, normally that's a no-no, but here's why we did it. Take a look. 65-minute chart. I mentioned to the room traders that we are coming in here. We have a very clean chart. Market was going down right from the get-go. This pullback, McDonald's was trading very clean. I can go down the 15-minute chart. The trade was very clean. As a matter of fact, as the market was just totally hammered in the first 30 minutes on the 24th, look what's happened for the first hour and a half in the market here. It just did nothing but McDonald's but going straight up here. So that told me it had relative strength. So there's 5 things I want to kind of reveal with you here. Number 1, we had relative strength against a market that's getting killed. Number 2, the negative part, we were up to third day up into square top supply, as I just showed you off the daily chart. The positive is we were pulling back into 50% retracement. So put a Fibonacci line on here. That's about 50%. You don't need to on this because you can just eyeball that. That's about 50% retracement, right? And one wide range bars ignite that move on volume. Came back here, 65-minute chart. We had a bottoming tail. This bottoming tail was starting to form right in here. And then what had happened was we entered the play right here. I'll kind of share with you what we did. We had ended up being a hammer on that play, or close to it, small tip at the top here. And it was all happening at the 8 EMA in a relative weak market, in a weak market. So this would be relative strength. So the 5 things are: we had relative strength, we had a Fibonacci retracement that wasn't killed, wasn't like 80% pullback. We ended up with a bottoming tail. We had it happening at the 8 EMA. We had a hammer, and we all had relative strength. So that was enough for me to get into play. We took the 305s by the 302.50 by the 290.70 bull put spread in here, expiring this Friday, the 28th. McDonald's loaded up the contracts. Typically do probably about a $600 risk on this, and it was nothing but money. The straight up here today with the market even trying to move higher, and it couldn't. McDonald's went back, and again, look where we came to today, day 4 on the move here, right up into the square top and closed about 90% up in that square top. Now, supply is still here. I don't suspect it'll go much further than this. I think McDonald's will kind of drift around here a little bit. and they'll probably head fake lower, and then it may decide to go higher. But again, the key is on this is making sure that you are trading clean. You have at least 4 to 5 attributes that we teach in our room through our mentorship trainings that are apparent. One of the big ones is being strong against the market. And if you have a sector that's basically, let's say you're trading consumer defense, you're trading Coca-Cola, and that consumer defense is trading better than 2%. And most of the other ETFs are trading lower. That's a good thing to look at. I'm going to do one next week that's going to go into an exact trade of how we're using the ETFs to help determine the kind of the spangle of trade that we're going to look like, the actual trades of the stocks that are going to be in that bucket, if you will. But it's all going to start from the drill down process from the ETFs forward. And then we'll pass through 90% and we'll find that 1 or 2 trades that are going to give us the best odds. So I hope this helps. More to it. Remember, full throttle traders, we don't trade what we think. We trade what we see. Have a great day. More to come.